Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.
Welcome back to Kitco Mining's ongoing coverage of Xplor 2024 in Montreal. Joining me now is Jean-Felix Lepage, VP Projects for O3 Mining. Jean-Felix, happy to have you today.
Thank you. Thanks for having me. And good morning. Always a big event for Quebec, and really happy to be here again this year.
Absolutely, and this year especially because we've seen a turn in markets, which has been very good for the majors and for everybody else, from what we're hearing. So very positive atmosphere this year.
Yeah, I mean it's amazing to see the gold price getting. I mean it was close to 2,800 just yesterday. So I mean the run that the gold had since, I'll say, August, and people try. You always have in mind the last few months, but we were at 2,000 at the beginning of the year, and it stayed there for a couple months. So it's really a recent raise that we had in gold. And I think it will continue because I mean the interest rates went down this year, and there was a big drop in the U.S. and Canada as well. So I think it will just continue like that. I expect more of this next year. So why not 3,000? Why not 3,500 for next year?
Exactly. Now, what do you see? Obviously, we know that the impact on mining companies has a bit of a lag. So gold can make very big moves. And gold's move started last year as well. This has been, the peaks that we're seeing now are unprecedented. But we were seeing strength last year, and we were waiting to see when is this going to filter down into the mining sector itself. So talk to me a little bit about the impact, where we're at in that cycle for gold, the gold sector, gold companies, and also what that has to do with how you operate, how you operate, how you value.
Good, really good question. So I think you understand. So how mining companies use gold price. So first they use it as in the policies for reserve statements. So that's the price they use to calculate the cutoff grade and then the resource. So if you look at, and most of the major publish their reserve at the end of the year. If you look end of 2023, the majors were around 1,300s and 1,400s. That was what used in their reserve. And if you look back, they've been doing incremental of $100 gold per year, but really cautiously over the years. And if we look back the gold price, it was between 1,800 and 2,000 for almost 3 years. So we can assume that 1,800 to 2,000 means 1,400s for reserve. And the other place where people will use the gold price is for financial evaluation and valuation. So what you put in your model as a revenue input, that tends to be a little bit higher. And that in the same period where you see the reserve at 13, 1400s, it was more around the 15, 16, 17, depending on the company. And that's more reactive because it's more a short-term thing versus the reserve that is more a long-term perspective. And so at the end of last year, we've seen major going out with studies at 1,900s, or this year going out at 1,900. So we've seen that. So I expect that gap of $400 or $500 on the reserve will flow slowly next year. And so as the reserve will go from 1,400 to 1,600 and 1,700, so that will open new areas for miners, but also change their view on on the other project of the mine or the juniors project that they have in their area as well. So.
Okay, so and this is a relatively predictable curve. When gold prices, even if the mining sector is historically very conservative in business practices and also in terms of projections, don't want to sell the moon and not be able to deliver. But here we are with sky high gold prices, and as they hold at these levels, as it's not just the peaks that seem to be unprecedented, but the floor appears to be rising. So I guess mining companies are really basing these types of calculations on the floor and on a realistic projection of where that floor is going to be. So this is what you're describing is something where the mining companies will be revalued at much higher levels while still being a relatively conservative projection based on the gold prices that we're seeing.
Exactly. So I think when we recognize that either gold price as the new floor, and I think now that we see the gold at 2,800, I think that at 2,000 floor will be recognized soon enough. So, and when the miners move there, then I think it will open things different, and I think that will trigger some opportunities in the camps, in different camps. And you take Marble Alliance, for example. So I think that's. So our approach with that is we don't want to push too hard. So we're minor as well, so we're conservative as well. So we want to keep it under control. So instead of looking more at that policies around gold price and calculation of cutoff grade, we want to have like more a good view on the cutoff grade itself, so in gram per ton, and the average grade of our project. So that's what we are looking right now, working on a new PEA. So we're working on a PEA now that will go out in Q4. That PEA will include an updated resource for our main deposits, and that's using the 2024 or early 2024 numbers. So it will be quite conservative when comparing to the spot price. So that will be a first update, and then we'll do another update next year with a full feasibility study that will kick off in Q1.
Q1. Okay, so this is all coming up in the relatively near future.
Yeah, exactly. So yeah, Q4 is the results of PA, Q1 kickoff of the fees. So that means in Q4 next year, Q4 25, we'll have the results of the feasibility study.
And this is what we're hearing from a lot of the juniors and mid-tier miners, is that this higher gold price is allowing them to do more drilling, to move ahead with projects with a little bit more certainty in terms of not only in terms of the money, or easier to raise money, but also that the valuations will be attracting the majors. They'll be interesting to the other players. So I guess that takes us to the M&A environment. What are you seeing there? How are you approaching this environment, knowing that this revaluations and these sustainably higher gold prices are raising the floor for everybody, making these things more attractive?
I think for us, I mean, our vision as O3 has always been to become a producer. So we don't want to be about tomorrow, but we still want that stress in the market. So it helps all the stock price around. So and we have seen process in progress right now, and Newmont's trying to sell assets in Canada. So we know that there's a lot of players, the mid-sized producers, are looking into those assets. So we know there's money in the producers, because I mean they're selling gold at 2,800. So we know they have money in bank and they're looking to buy assets. So once that process is done with Newmont, so the company that doesn't buy anything in that process will look for something else. So even if we were not looking to sell, it will bring tension in the market, and I think that will help all of the junior stocks to go up as well. So we have in the gold price itself, we have the tension about M&A, and also we have to deliver on de-risking on our own project. So there's two ways we can raise the value of our company. First is to drill and have results. The second one is to de-risk our advanced projects. And for us, it's technical studies, but it's also doing the permitting. So we're advancing quite fast on the permitting as well. So once we get there and you have a permitted with fully with the technical studies completed, then you're ready to build and to cash on that high gold price.
All right. Well, it sounds like we should be maybe circling back with you towards the end of Q1 and see where the sector is, and also see where O3 is at.
I will be happy to see you again.
Well, thank you so much for joining us today, Jean-Felix.
Thank you.
I'm Ernest Hoffman for Kitco Mining. Keep it here for more coverage from Xplor 2024 in Montreal.
Kitco Mining special coverage of Xplor 2024 is brought to you by Radisson Mining Resources.